Movers and shakers, we're still joined by the chief economist of Bank Permata, Josua Pardede. But Joshua, now I want to ask you about the banking sector in Indonesia, which in 2022 saw considerable growth. What about in 2023? What is your outlook for the banking sector, especially with the prospect of more rate hikes by Bank Indonesia and potentially the Fed as well?
Yes, what we've seen also for the banking sector last year, the credit growth still at a good position, yeah, double-digit growth at 10 to 12% year on year. And then we also think that the non-performing loan last year still could be managed well below 3%. And this leads to the manageable profitability for the banking sectors. As we can see from the OJK data that the net interest margin for banking sectors, as per November, already rose to 4.7% compared to end 2021, that's still around 4.5%. Not to mention also return on assets in banking sectors also increased from end of December 2021 at 1.85% to currently at 2.47%. So I think this also, the good condition in the banking sector is driven by the improving economic growth in 2022 that is expected to be around 5.2 to 5.3%. Looking ahead in this year, we are expecting that the credit growth still positive at around 8 to 10%, even if the transmission of interest policy from BI to the banking sectors will likely to continue this year. And this will lead to the higher cost of fund and also tighter liquidity in banking sectors. But we also note that OJK still extend the restructuring regulation on some sectors. So I think this also will support banking sectors to grow their portfolio in healthier growth. So I think, and based on our forecast that GDP growth this year to be still positive at 4.7 to 4.9%, we still believe that profitability could still be managed well, and also the non-performing loan, I think, will still manage at around 3% by the end of this year.
Right, and so also similar to the banking sector, the Indonesian stock market also saw growth of about 4% last year overall in 2022. However, recently it has seen a downward trend. Today, compared to December the 30th, it's down about 30%. In the month of December alone, the IDX also fell by 2.4%. Talk to us about some of the factors behind this downward trend, and do you think it is a trend that will continue?
Yeah, I think the first factor is that as the global economy will likely slow down this year, there is a rising expectation that the commodity price expectation also will be normalizing, as soon as end of first semester this year. And this leads to the expectation that the financial condition for some mining-related sectors also will be affected. But still, I think looking at the current level of commodity, for example, like coal, which is still above $300 per tons, I think although the performance of energy sectors related already down almost 7% year to date, but I think some sectors still can still have a positive effect, because looking based on our calculation and research, actually the break-even point for the coal prices, for example, still relatively at around 60 to 80%. So whenever the coal price still above $100 per ton, I think the coal mining sector still can still manage their financial condition, although for sure the condition compared to last year will be declining.
Okay, just very quickly, we have about a minute left. I'm going to talk to you about commodities and also energy stocks on the IDX. Is coal still a good investment for this year? And what about oil and gas stocks as well?
Yeah, for coal, I think as we already noticed that China relaxed the restriction or the ban of Australian coal, this also will imply that the coal prices also will start to normalize. But again, because of the supply, the natural gas supply from Russia to Western Europe still limited, so I think Western Europe still can still depend on coal in the next couple months. Yeah, so I think this will maintain the price level of coal at least at the end of first semester of this year. But in the second semester, we are expecting that coal price will also start to normalize. And then for the oil and gas sectors, I think similar to coal and other commodity, we are seeing that oil prices, the crude oil also is expected to maintain below $100 per barrel. So I think in terms of the production domestically, we are still struggling to, in, to improve our production level. So I think the oil and gas sectors domestically, I think we still need to have another innovation, in order, for example, like offshore lifting. So I think this will be another strategy to maintain the oil and gas and other sector and other commodity related sectors.
Okay, Pak Josua Pardede, Chief Economist of Bank Permata, thank you so much for your insights this afternoon.